Hi, I'm Graham, the Insights Manager at finder.com.au. Now, as you know, the RBA have cut the cash rate twice in a row. We've done a couple of videos on how that affects the housing market, which you can check the links below. This video will look at how it affects savings and where the best place is to have your money in this low interest environment. So what happened? Well, the RBA has cut interest rates by 25 basis points 2 times in a row. A basis point is basically 1/100% of a change in the rate, so this totals 0.5%. If you want to find out exactly why we use basis points, you can check out a link to the Insights blog in the description below. Why does this matter? Well, the cash rate determines the cost to commercial banks of borrowing money from the central bank. And if they can access money cheaper, they can then lend it to consumers for less. So that means the home loan rates tend to go down when the cash rate goes down. But it also means that banks are less inclined to hold deposits because they can access money cheaper. So they're less inclined to pay more for you to have your savings in their vaults, and therefore savings account rates also go down. So how does this actually affect everyday Australians? Well, our consumer sentiment survey of 3,000 Australians shows most Aussies report having about 30 grand in their savings account and adding about $650 to that every month. Now, if this is you and you have the highest rate savings account on the market, that's 2.6%, you'd earn about 2 grand in interest over 2 years. Now, if your bank passed on the full 50 basis point cut, and your rate reduced to 2.1, this would lose you about $400 in interest over the same 2-year period. So it's a significant drop. It's not huge, but you can imagine if you're a retiree or you're trying to save for a home and you've got more than that in savings, it's going to have quite a big impact. So which banks passed on the biggest cut? Well, banks are not obliged to pass on the whole rate cut, or indeed any part of the rate cut. They can pick their rates irrespective of the RBA. So most banks passed on the full 25 basis point rate cut, but 3 banks, UBank, Suncorp and CommBank, all passed on slightly more. You can see those on your screen, but bear in mind, these lenders have not actually announced the cuts in July, so they may not pass on as much of a cut following the June cut. Basically, watch this space. So that's June. What about July? Well, since the July cut, ING, ME, Rabobank, Citibank and Suncorp have all announced they're passing on the full 25 basis point cut, and BankVic are passing on 20. We expect more rate changes to come in the coming days, so check the links below for the most up-to-date information. So how can you make the most of your savings in this low interest world? Well, even though rates are low, there's still better value to be had with some accounts rather than others. The way I'll explain this is by dividing the savings market into 3 different types of products. So the first type of account on the market is basic online savings accounts. These are the old-fashioned accounts. You put money in and you get an interest rate. Most banks will offer a bonus rate for a set period of time, but after 3 or 4 months that drops low, very low. RBA data shows the average interest rate for these accounts is only 0.6%, which is almost nothing. So the second type of account is what I'm calling a withdrawal restricted bonus savings account. Now these offer better interest as long as you deposit money into the savings account every month and generally do not make a withdrawal, or at least don't withdraw as much as you put in. So you need to keep increasing your savings. These offer on average 1.95% according to RBA data, and have actually become better value over recent years if you look at the same graph for these accounts. So what's the final type of product? Well, the final type of product is my favorite type of savings account. I'm calling these non-withdrawal restricted bonus savings accounts. Now that's quite a mouthful, but it's necessary to describe what these are doing. These are similar to the bonus accounts we talked about before with the big banks, but these tend to offer a bonus rate if you do your everyday banking with the bank rather than if you don't withdraw your savings. So you get your wages put into a current account, you make a few debit purchases, and you get this ongoing bonus rate. Now the thing here is that the rate tends to be higher. These rates go from 2.3 to 2.6% right now in the market. So this is the place where you get the best value for your savings, and also your savings are not locked in. You can take them out whenever you want. You can find more information about the current rates for these banks and other high interest savings accounts via the links below. So what's to come? Well, according to economists we're surveying, we do expect potentially more cuts in the market. About 40% of economists surveyed by Finder are expecting 1 more cut to come, and about 1/4 are expecting 2. So keep an eye on those interest rates. So that's quite a lot of information, but to conclude, even though rates are low, even though people aren't making a lot from their savings, you can still make more than other people in the market by picking the right account. Keep an eye on those online banks, keep an eye on those ongoing bonus rates, and choose wisely.